Hey, how's it going, everybody? I'm Mike Weber, your Los Angeles and South Bay real estate broker, here with your market update for the beginning of September 2022. So we're kind of seeing the same things we've been seeing that really started a few months ago as the Federal Reserve started to raise interest rates. And that is, sales are continuing to fall. Pending sales are really dropping off rather severely. I mean, something that we haven't seen as long as I've been in the real estate business. Definitely dramatic change there. And then prices are actually falling, although they remain just slightly above where they were last year at the same time of year or for the same month when we look at the year over year data. That said, depending on the area, they've fallen as much as 20% across the board in the county of Los Angeles, roughly 10% since their peak earlier this year in March, before the Federal Reserve really got off on this rate hiking cycle that they started. Now, it's unclear what's really going to happen, but we are starting to hear more rhetoric, more communication out of the Federal Reserve that they are going to continue to raise rates next year to attempt to get this, rampant inflation under control, which certainly, if that continues to happen, we would expect to see the same trends in housing in terms of more inventory sitting on the market, less homes making it to the closing table, and of course, further reductions in prices as the overall cost to the consumer to purchase any given home continues to rise with the much higher rates. And so those lower prices will be desperately needed to help make the home buying experience or process a little bit more affordable for these home buyers out there in the market. So let's go ahead and get started. We'll take a look at Los Angeles County, and then we'll move into the South Bay beach cities. All right, so in the county of Los Angeles, as you can see here, we are up just slightly from a year-over-year standpoint of about 1.6% in median home prices. And unlike what we've seen in many of the previous years, where prices just kind of inch their way up and then kind of flatten out through the holidays and then continue to do the same thing the following year, you can see here that as the year has progressed, home prices have fallen back down to the baseline that we experienced kind of at the peak of the previous year in 2021. When we look at the supply of inventory in the Los Angeles County area, what we notice is that it's up 14%, which really isn't that incredible if you think about it. It's just slightly above where we were in 2021, but well below the peaks that we saw in the previous years. So it is definitely growing, maybe not as fast as some people would expect it to grow. So we'll have to keep an eye on it. It's going to be interesting to see what happens. Now, when we take a look at pending home sales, that's where we see something majorly significant. Pending home sales are down 51% compared to where they were last year. They're almost as low as where they were right when we were smack dab in the middle of the lockdown. And they're even lower than where we would be in that kind of off-season December sort of market where people are, off for the holidays and not really thinking about selling their homes generally. We're well below that for the previous 2 years. So this is definitely an anomaly. This is not a good sign. This just shows that a lot less homes are actually making it into escrow, which leads us to our next metric, which is closed sales in Los Angeles County. And those are down 28%. So obviously we're seeing a lot less homes going pending. And then of course, resultant from that is the closed sales number is down almost 30% as well. And again, this is a similar kind of change in that we wouldn't expect to see this low closed sales kind of in the middle of the year peak selling season. It looks like this is a much lower data point than anything we experienced in the last 2 years hold the period while we were obviously in lockdown. And if we move on to the South Bay beach cities, we see a similar trend as the county as a whole, which obviously makes sense. And that is median home prices are up just 2.8% from a year over year standpoint. Now they have dropped dramatically over the last 4, 5, 6 months since the Federal Reserve started raising rates. And really, they're just right about where they were at a year ago today, but still in positive territory which obviously is good for many sellers out there. But of course, the question is this going to continue? Are these rates going to keep going up? And then of course, our price is going to start to come down even further. And looking at inventory in the South Bay, it's a bit more of a dramatic of a picture than we're seeing in the county of Los Angeles. We're up 37.5% compared to where we were a year ago, still far below some of the inventory levels we had in the past, 1, 2, 3 years, but definitely growing and rising pretty quickly. And I think this trend is going to continue, of course, as long as the rates remain elevated or continue to rise. But of course, overall, still relatively low inventory, certainly not enough to really make it a balanced market. So in that sense, we're still leaning towards a seller's market, albeit one that is a bit harder to sell in, and obviously one that's harder to get, astronomical prices or well above asking prices like it's been over the past couple of years. Pending home sales in the South Bay, same picture as the county of Los Angeles, down almost 54% year over year. This is a terrible low, about as low as what we saw during the lockdown for COVID, if you can believe it. So, that means there is very, very little that's actually going pending right now, when you're probably seeing it out there. There's a lot more signs out there. There's a lot more properties that are sitting on the market. Days on market are rising. A lot of properties that are not getting offers, and a lot of properties that are ultimately coming off the market as canceled or expired listings. Some of them get relisted, and of course, many of them don't. And finally, closed sales in the South Bay are reflecting what we're seeing in the county as a whole, down 27% year over year, really following that massive drop in pending sales, ultimately these closed sales. So again, just getting harder to get a home sold, obviously at a crazy price, a really high price, a much more tricky market to be a seller in, and obviously a better market to be a buyer in, of course, depending on your buying power. So I hope this information was useful. If I can help you guys with any real estate needs in the greater Los Angeles area, definitely reach out to me. I'm here to help. If you haven't clicked all the buttons and subscribed and liked and done all that fun stuff, definitely do that so you get my future videos. I really appreciate you guys watching, and I look forward to seeing you on the next video. Take care.